Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. He's speaking to us from Virginia. Welcome back to the show, Mike.
Oh, it's great to talk with you.
Mike, a nice rally in gold again.
Yeah, finally. Gold, of course, took a real big hit the other week when it fell for a few moments below 1,700. When you look at the chart of gold, it fell actually all the way down to 1,675, and now it's rallied back above 1,800. But in March, it actually fell to that 1,675 level too, hit it twice, and then rallied up to 1925 in June. And so essentially we pulled back down to those spring lows and are rallying back above them. It looks like what you would call a classic double or even triple bottom, because that level was tested twice in the spring. So the August test is a retest is a successful third time. Now the high of July was around 1840, so it looks like we're rallying up into that area. And we'll have to take it out to get the bulls fully in control. It doesn't have to happen tomorrow, but at some point over the next couple of weeks, it should happen. And I think it will. And then, we can look for higher prices going forward from there. So I think this is actually a good time for people who are interested, to buy mining stocks. I, of course, own some. But it's not just gold that's gone up. Silver has had a similar price pattern to it. And, as far as picking out stocks go, I'll just mention one that's interesting from a charting perspective, a big cap. That's Wheaton Precious Metals, and I do own it. But I just want to remark that what this stock did is, while silver fell in August, and most mining stocks fell. Also, Wheaton Precious Metals, symbol WPM, held up. It barely dropped at all. It displayed strong relative strength. And typically, stocks that do that when the overall sector they're in decline end up being good stocks to buy once things turn around. They tend to become leadership type stocks. So I would suggest those are the type of situations people should look for if they're interested in buying into the commodity sector now. And you can look at small cap stocks that have display that type of behavior, that they've held up while the sector as a whole, when it comes to mining, pulled back. In energy stocks too, the price of oil got up to $75 at the end of June and pulled back down to really right under 62 yesterday. The 200-day moving average is right above 60. So we essentially have seen a roughly little bit over 10% pullback in the price of oil take place over the past 2 months to the 200-day moving average. Again, that's also a classic move in a bull market. You get pullbacks to that 200-day moving average and then rallies. So, it looks like overall that's what's going on in commodities. The CRB index also, went through basically sideways consolidation starting at the end of May, and looks to be turning up also. So I think now's the time for people to get, into commodities. And, I'm in many commodity stocks. I also like agriculture stocks, so I think this is the time for people to get interested in them.
Any particular commodities you think are hot?
Well, when it comes to like trading individual commodities, like let's say copper or sugar, you kind of have to have a little bit of a short-term orientation, and I actually look at these things more as long-term investments. So I tend to invest in funds that hold a bunch of commodities. So, for example, I own the DBA ETF. It's a broad-based agriculture exchange-traded fund. It owns corn, sugar, wheat, soybeans, and all that. And so that's the fund I've got a pretty good position in.
I haven't understood why the grains fell when there's a massive drought in the West.
Well, I think they just went up so much. For example, if I look at the price of corn, it was trading in May of last year under $3.25, and it went up to $7.25. It had over 100% gain, and between March and the peak in May, it went up from $5.50 to $7.25 straight up. In fact, in April basically, and that draws in lots of future traders, speculators, and they end up, people who buy in at the end of a move can also often become those that sell as soon as things, appear to lose some momentum. So I think that's the story about why so many of these things, did kind of have a pullback, and really the whole sector, commodities in general, really pulled back together from let's say May to recently.
The NASDAQ closed at a record high. What was the story there?
Well, it's not a huge story, but more of a continuation of steady buying, from time to time that we've been seeing over the past 14 months. However, that said, I think the momentum in the market is not what it was when we started this year. Yes, the NASDAQ made a new high, but it's not even 1% above the high it made 3 or 4 weeks ago. And that's also the case with the Dow and the S&P 500. So the rate of advance in the market is much slower than what it was when you started this year, or even what it was in April. And the leadership in the market, the stocks that are driving the market up, those stocks are, the number of stocks doing that are really narrowing. In fact, the number of stocks making a new 52-week highs when it came to NASDAQ was less than 45, or right at 45, yesterday. And many stocks are starting to trend down, even as the market averages are going up. And this is a classic sign. It's called declining internals of the market. It's a warning sign that you're near the end of a rally, or even could start a correction or a bear market. However, the divergence between these weakening internals and the performance of the market is not yet extreme enough where they're signaling, they're like signaling, saying it's a yellow light. They're not saying red light. Really be worried. So, but that could happen if this pattern continues, where the internals continue to decline and the market, appears to be exciting for people, the headlines, and new highs. But a lot of stocks are no longer, if that situation continues, it's saying to Thanksgiving, then it will be something to take very seriously. But a lot of stocks are not doing, what they were doing. You can see this in something, let's say the Buzz Exchange Traded Fund, which was designed to mimic or own the stocks that are most talked about on social media. This ETF made a new high in June and has failed to do so ever since. The ARK ETF also is lagging the market tremendously too. It's not, it's down substantially since it peaked in February and is below the high of last month. So there's really a dichotomy in the market between, narrowing leadership and what the average stock, so to speak, is really doing out there. And I think this is likely to continue for the weeks and months to come.
We'll have more with Mike Swanson right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, are some of the higher commodity prices being driven by this shipping container shortage?
Oh, it certainly is a big element to what's helping to cause inflation across the board, and it's hurting the economy. I mean, I ordered a laptop, computer, right around July 4th from Dell, and it was supposed to be shipped in August, and now they're telling me it could be shipped after Labor Day. That's just one example. I mean, so it definitely is causing prices for just about everything to go up. And I have no doubt that it's helping to contribute to some of these higher commodity prices. I'm not expert enough to know which ones are most affected by this and which are not, but overall, I'm sure it is a factor there.
The shortage of computer chips, is it a manufacturing problem, or are they stuck in this supply chain problem?
Well, it appears to be a supply chain problem where there's disruptions and as you mentioned, shipping. I mean, China has had to close several ports on and off. I see that in the headlines. I read the articles about it, and even sometimes shutting down their factories. So it's certainly a serious factor impacting the computer industry.
Does it emphasize the need for more domestic production, that China's an unreliable source?
Well, I don't know. I mean, if you do domestic production, it's going to be more expensive because you'll have to pay the workers more money. And I don't know if these disruptions are how long they're going to last, 6 months or a year. So I don't know, if this is a temporary or permanent situation. I'm not really sure. And that's one element about everything in these markets. There is uncertainty, when you think about and try to project exactly what's going to happen. But despite that, the markets themselves are relatively calm. And one of the reasons why is the trend of the markets going up and not having any serious declines ever since the crash of last year has caused much complacency among stock market investors and traders. So it's funny, that you can see the uncertainty, but people in the markets are excited and confident.
Margin debt's at a record high. Does that start to slow the market at some point?
Well, yes, and that's kind of an example of mass complacency. You can find all sorts of things in the news to worry about, but it doesn't matter when it comes to traders and investors. And one reason why they are taking on more margin debt isn't simply because the market's gone up a whole lot, but the momentum in the market has slowed down, and that is provoking some who want to continue to, it becomes harder to make good returns or big returns when the momentum slows down. So some people are trying to continue to make their big returns, hedge fund managers or even smaller speculators with Robinhood accounts and whatnot, by taking on more risk, by buying call options to take smaller amounts of money and try to make bigger returns with it, or go on margin. If you buy one stock and it's going to go up 1% and you're running a hedge fund, well, 1% isn't exciting. So let's go on margin and try to turn that 1% into 2%. And this is sort of a big mentality happening. However, as you said, it could become a giant problem at some point, and it will, whenever the market does have another correction of 10% or more, in, say, the S&P 500. And it will eventually happen. I mean, we had one around Labor Day last year. In September, it pulled back about 10%. We saw the NASDAQ around March fall over 12%. And typically the market does have a 10% decline at least once a year. And it will happen again. And when it does, margin calls will hit, and they could turn a 10% decline into a 15 or 20% one. So I'm not saying that's about to happen. I don't think it is. However, if the divergence between the internals and the market averages continues into, let's say, Thanksgiving or New Year's, then I think we'll be facing a high risk of one happening. So it's something we have to be on guard for. And the bigger the margin debt grows, the bigger that decline, when it does happen, will be.
Robinhood, with its IPO, dropped a bit, then it doubled in price. What's the story there? Do people think because it's on their phone, it's a good thing to buy into?
Well, it's sort of, I think that stock I think the real story behind that stock is sort of similar to what I was talking about margin debt, where people are, and Robinhood, is mostly small traders that fueled that rally from 35 to 85, and now it's 47. It's following the same exact pattern as AMC and GameStop did earlier this year, where the stocks spike up and then, it just peters out and it's over. Well, there are a lot of stocks that had big rallies last year and going into this February. And also crypto coins was something that a lot of people got into. In fact, since Robinhood is now a publicly traded company, they're having to put out public reports that reveal information about how the company operates. And they revealed in their last earnings report that 60% of their customers trade cryptocurrencies. That's a staggering number. It means at least 12 million Americans are doing that because they got over 20 million customers. But I think the interesting thing about Robinhood as a stock is that while they were at one point dozens of momentum plays, let's call it that people could ride onto or try to trade, going, in the last half of last year or the first quarter of this year, by the summer, all these plays dried up. And by June, there really weren't any hot plays anymore. So along came the Robinhood stock to be like the one thing for people to grab onto as a trade. So I think that's part of the reason, it happened, is people were looking for something to trade. Nothing else was going up. It made the news. Everyone with the Robinhood app, knew it was happening, and they united to buy. Not simply because they like Robinhood, but because it was the only momentum play of the day. And, if there aren't new momentum plays over the next couple weeks that appear, and right now I see none, that also will be a warning sign for the stock market. But interestingly enough, I would add this, since that Robinhood petered out, the play ended, it's over, crypto and Bitcoin has rallied. So I guess you could say the Robinhood people and these small momentum traders have jumped into crypto coins as the momentum play, and they've driven it up to 50,000. I think it's going to peak out, and then, go back down over the course of the next couple of weeks. So will there be another momentum play or not? If not, then it's going to be, another warning sign. But it'll be fascinating because these people are true believers. I get emails from them. They think, buy these coins and this and that, and they're buying the rally believing this is the real deal. but we've seen false rallies in this stuff before, and it'll be interesting to see how it unfolds. I'm not short coins. I'm not long coins. I don't really personally care what they do, but it will be interesting just to be as an observer to see what happens to these collectible virtual coins.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.